A surge in metal prices has transformed Atlas Consolidated Mining from last year's loss maker into this year's profit engine. But the story doesn't end at earnings. For shareholders, the real question is when, or if, those profits will translate into dividends. Atlas's turnaround is striking. In the first half of 2026, the company reported a net income of 4.62 billion pesos, reversing a 653 million pesos loss from a year earlier. Net revenues soared nearly 70%, while operating profit jumped alongside higher commodity prices. Copper led the charge, with average realized prices climbing to $5.97 per pound, up 38%. Gold also offered a lift, rising nearly 50%. This windfall arrived as Atlas moved into the final phase of a 3-year mine redevelopment, expanding ore access and operating efficiency. The project is set to finish by the third quarter of 2026. For investors, it might look like the perfect setup: better ore, better prices, better profits. Earnings per share swung from a loss to 1.30 pesos. Second quarter net income alone nearly matched the company's entire profit for the first half. Yet, despite the financial turnaround, Atlas has paid no dividend this year, and there's no fixed payout policy. Payments depend on board approval and available retained earnings. Cash generation is robust, 5.69 billion pesos from operations in the first half. But much of it goes straight into mine investment, over 2 billion pesos spent, in debt reduction, absorbing nearly 1 billion pesos more. Atlas faces a heavy debt load, 15.95 billion pesos in current long-term debt, with total current liabilities exceeding assets, keeping its liquidity cushion thin. The current ratio has improved but remains below 1, signaling a need to prioritize cash preservation. Debt obligations and ongoing redevelopment mean dividend payments compete with critical financial priorities. Even a sizable payout, 30 to 50% of earnings, would only yield 2 to 4%, and that's assuming the board commits substantial profits to shareholders. Atlas remains fundamentally tied to volatile copper prices. Earnings gains today can quickly reverse with a shift in the market. The company's financial position is stronger. Debt ratios and equity have improved, and operations are more efficient, but solvency isn't the same as surplus cash. Management must balance debt repayments, capital spending, and liquidity against the risk of future commodity downturns. For now, Atlas offers exposure to copper market highs and operational transformation, but the income story remains incomplete. Profits are here, but shareholder checks are still out of reach. Until a sustained dividend policy is established, Atlas should be viewed as a recovery and growth play, rather than a dividend-yielding stock.